By 2005, a quiet revolution had started in the living rooms and kitchens of Japan. It wasn't marked by loud protests or grand declarations. Instead, it was led by a group often overlooked in the high-stakes world of finance, Japanese housewives. These women, traditionally focused on managing household budgets, started turning their attention to a much bigger financial stage. Armed with simple yet effective strategies, they entered the world of finance when the rest of the Japanese economy was sinking. By 2007, their impact was so great that financial analysts took notice. So how did these women, with no formal financial training, start influencing global currency markets? How did some Japanese housewives outsmart global finance? Let's have a look. This was around the time the dot-com bubble was at its peak. However, Japan was struggling. The Japanese economy was not doing so well, so the government decided to lower the interest rate. Now, how would that help? You see, when the interest rates are low, more people borrow from the bank, which ultimately helps with the economy. But this strategy does not do good to those who are already keeping their money in the bank. With low interest rates, they get a smaller proportion of their savings. So, at that time, Japanese housewives started doing something unexpected. With Japan's economy not doing great and interest rates super low, keeping money in the bank was like putting it under a mattress. It just sat there, not growing, not doing anything. These smart women who usually took care of their family's money began to think, there's got to be a better way. Then they hit upon a clever idea. They looked outside Japan and saw that in places like Australia and New Zealand, banks were offering higher interest rates. So they thought, why not take our yen, where it is earning next to nothing, and invest it where we can get more? This idea is what's called the carry trade. Here's how it worked. They borrowed yen at Japan's low rates, then exchanged it for currencies like the Australian dollar, where they could earn more interest. It was like swapping an old, slow bike for a fast one. The difference in speed, or in this case, the interest, was their profit. This wasn't high-end investing or anything complicated. It was just a smart move to make their savings work harder. And the most surprising part, these housewives weren't financial experts or Wall Street wizards. They were regular people, making a smart choice with the money they had. Now, their method was simple. Borrow, swap, earn the difference. It was like finding a better deal at a different store and taking advantage of it. And it worked. They started making more from their savings than they ever did before. By doing this, these housewives, often called Mrs. Watanabe as a group, started to make a big splash in the world of global finance. They showed that you didn't need a fancy degree or a big office to make smart money moves. All you needed was a good idea and the courage to try it out. But later, we learned that not every good strategy is a risk-free strategy. In the late 1990s, Mrs. Watanabe was thriving in the world of the carry trade. She was enjoying her profits. In Japan, a staggering half of household assets were in cash and bank deposits, a sharp contrast to the 14% in the United States and 37% in Europe. Mrs. Watanabe's strategy of borrowing low-interest yen to invest in higher-yielding foreign currencies had been paying off handsomely. However, just like the highest swing in the playground gives you the most thrilling ride, it also has the greatest risk. Then, in 1998, the financial landscape changed dramatically. Everyone was hit by the Russian financial crisis. Russia defaulted on its debt and triggered a wave of uncertainty in global financial markets. This crisis was proof that high returns often come with high risks. The turmoil hit the carry trade hard, especially for those like Mrs. Watanabe, who had enjoyed its benefits. The crisis sent shockwaves through currency markets. Investors panicked, so they began pulling out of riskier investments and moving their money back into safer assets. This sudden shift directly impacted Mrs. Watanabe's strategy. As money flowed back into the yen, its value started to rise sharply. This rise in the yen's value was problematic for Mrs. Watanabe. The carry trade depends on a stable or weakening yen, so a strengthening yen meant that when converting her foreign investments back into yen, she would get less than she had initially exchanged. This erosion of value was a blow to her strategy. At the same time, interest rates across the globe began to fluctuate wildly. The stability that Mrs. Watanabe had relied on was now replaced with uncertainty. Her once profitable strategy was now facing significant challenges. This left Mrs. Watanabe and others like her in a precarious position. The question on everyone's mind was, how would they deal with this new, turbulent financial landscape? Was there a way out of this crisis for Mrs. Watanabe? Indeed, there was. Let's see how they managed to adapt and overcome these new challenges. In the late 1990s, Japan, including the smart Mrs. Watanabe and everyone else, was in a tough spot economically. To fix this, Japan did something really creative in April 1999. They made interest rates almost zero. This was their way of trying to jumpstart their economy. But Japan didn't stop there. In 2001, they tried something even more daring called quantitative easing, or QE for short. This was a totally new idea. Basically, it's like the government creating a bunch of new money and using it to buy things like government bonds. This helps to make more money available in the economy, which can encourage people and businesses to spend and invest more. Around 2005, something interesting started happening. A lot of Japanese housewives, our Mrs. Watanabes, began to get into online currency trading. These women, mostly in their 30s and pretty good with computers, started trading foreign currencies right from their homes. They used their own money, family savings, or even borrowed money to do this, and guess what? They became really good at it. The world started to take notice. Newspapers and TV shows talked about these Japanese homemakers who were trading currencies while managing their households. Despite some people in the finance world not taking them seriously at first, these women showed that they were a force to be reckoned with. They were using Japan's money to make a big splash in the currency markets. However, Japan didn't want a repeat of past financial crises. So, in 2006, the Bank of Japan decided it was time to wrap up the QE and started to inch away from the zero interest rate policy. This meant slowly raising interest rates to make borrowing yen more expensive and the carry trade less attractive. They wanted the yen to get stronger and make it costlier for people to pay back loans in yen. But just as Mrs. Watanabe and Japan were adjusting to these changes, a new, much bigger challenge was starting to form. A financial storm, bigger than any they had seen before, was on the horizon. How would Mrs. Watanabe handle this one? Let's see. In 2008, the world faced a financial crisis more severe than anything seen since the 1980s. It all started with the collapse of Lehman Brothers Bank of the United States. It was kind of a giant in the global banking industry. This event affected the whole world. It triggered panic and chaos in financial markets everywhere. As the crisis started, people and institutions scrambled to move their money into safer assets. One of the safest bets during such times is often the Japanese yen. So just like in past crises, money started flowing into the yen, causing its value to rise sharply. For our Japanese housewives, or the Mrs. Watanabes of the currency trading world, this was bad news. The carry trade, which was their go-to strategy, relied on a weak yen. Now, with the yen growing stronger, they were in a tough spot. They had a small window of time to act, either convert their foreign investments back into yen quickly, or risk losing out as the yen continued to climb. This crisis was a reminder of how interconnected the global financial system is. An event in one part of the world, like the collapse of a major American bank, could have a huge impact on someone on the other side of the planet, like a currency trader in Japan. It showed that in the world of global finance, no one is an island. Everyone is connected. The 2008 crisis was a wake-up call for Mrs. Watanabe and many others. It highlighted the risks involved in global currency trading and how quickly things can change. So what was their next step? How did they get out of this time? Let me show you. After facing the ups and downs of the financial world, Mrs. Watanabe, the smart Japanese housewife turned investor, didn't back down. She learned more and became even smarter with her money. She realized it was time for a change, and that's when she discovered day trading. Day trading is like a fast game. You buy and sell stocks or currencies all in the same day, trying to make quick profits from small changes in the market. It's like catching a lot of small fish quickly instead of waiting for a big one, like they used to do with carry trade. With day trading becoming her new thing, Mrs. Watanabe found loads of helpful stuff online. There were now easy-to-follow courses, online seminars, and plenty of tips and tricks on websites. All these tools were super useful for understanding the quick and exciting world of day trading. In 2013, a significant change swept over Japan's economic landscape, and it was all thanks to a man named Shinzo Abe. After becoming prime minister in 2012, Abe introduced a set of bold economic policies that became known as Abenomics. These strategies were aimed at reviving Japan's sluggish economy and included three main components: aggressive monetary easing, fiscal stimulus, and structural reforms. The monetary easing meant pumping more money into the economy to encourage spending and investment. Fiscal stimulus involved government spending to boost economic activity. And the structural reforms were all about making Japan's economy more flexible and open to growth. These strategies had an immediate impact. The Japanese stock market, particularly the Nikkei index, skyrocketed by 30% in just the first 3 months of 2013, reaching its peak in March. The surge was a big deal, signaling renewed confidence in Japan's economy. Mrs. Watanabe, who is always quick to adapt, saw an opportunity here. With Abenomics boosting the stock market, she and many like her dived into stock trading. They started investing more in local Japanese businesses, helping these companies grow and create jobs. It wasn't just about making a profit, it was also about contributing to the revival of their own economy. The combination of Abenomics and the investment prowess of individuals like Mrs. Watanabe created a powerful force. Local businesses were getting the support they needed to expand and hire more people. The economy started showing signs of life after years of stagnation. Today, the story of Abenomics and Mrs. Watanabe is an example of the power of strategic economic policy and savvy investing. It shows that with the right approach, even in challenging times, people like Mrs. Watanabe can make incredible profits and contribute positively to their local economy. So guys, that was all for today's video. What do you think about Mrs. Watanabe and her strategies? Drop your opinions in the comments below. If you enjoyed this video and learned something new today, don't forget to like, share, and subscribe. Thanks for watching. I will catch you in the next video. Goodbye.